Congratulations! You found the Pirls Stock Market Commentary featuring the proprietary bull-bear point and figure market breadth summary chart for Sunday, June 14th, 2015. Market breadth. With this past week's market decline, our bull-bear point and figure ratio fell from 0.83 to 0.77, declining further into bearish territory. The total count of securities in bullish or bearish patterns rose 1% to 3,116. The count of bearish stocks increased 5%, while the count of stocks in bullish patterns decreased 3%. The Pirls PNF Market Breadth Summary Chart shows us a market now 3 consecutive weeks in bearish territory. Paid subscribers have access to the OpenOffice Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, and clicking Register. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 3 points for the 10th decline in 19 weeks. At a negative 34.32 points, it continues below all 9 tops above plus 100 and above all 4 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode. In the last 2 weeks, the Nasdaq had 3 accumulation days and 1 distribution day. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in accumulation mode. Momentum. Last week, the CCI 20 daily continued its decline. Then, after dropping below minus 100, it rose back above plus 50 before declining again below minus 50, where it ended the week at minus 53.66, still in a Woody's uptrend, but outside the range for a zero-line reject long entry. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 47 weeks ago, while the daily CCI 20 began a Woody's uptrend 8 weeks ago. The CCI 20 weekly continues in a Woody's uptrend and at plus 79.22 remains outside the plus or minus 50 range for a valid zero-line reject long entry signal. Industry rotation the last 2 weeks. All of the top 5 industries are positive and all of the bottom 5 are negative. Bullish, brokers, KBW Bank, and networkers continue in the top 5, with KDW Bank now leading it. S&P Retail has entered the top 5. Gold and silver continues in the bottom 5. Bearish, REITs continue in the bottom 5. Oil Services has entered the top 5. Semis has left the top 5 and entered the bottom 5. Focus this week from www.zerohedge.com. Writings on the wall. Texas pulls $1 billion in gold from New York Fed, makes it non-confiscatable. The following are some of the key excerpts. The lack of faith in central bank trustworthiness is spreading. First Germany, then Holland and Austria, and now, as we noted was possible previously, Texas has enacted a bill to repatriate $1 billion of gold from the New York Fed's vaults to a newly established state gold bullion depository. People have this image of Texas as big and powerful, so for a lot of people, this is exactly where they would want to go with their gold. And the bill includes a section to prevent forced seizure from the federal government. There are precisely two important reasons. One involves distrust in the current storage system. The second threatens the paper money system as a whole. In a lot of cases with gold, you may not have clear title to the metal. You may have a counterparty relationship that makes you a creditor. If the counterparty has a problem unrelated to gold, they can default, and then you become an unsecured creditor in bankruptcy, said Keith Weiner, president of the Gold Standard Institute. This means you get whatever is left after liquidation, often just a fraction of the initial value of your holdings. This exact scenario happened with futures broker MF Global. I knew people who had warehouse receipts to gold bars with a specific serial number, but that gold had an encumbered title, and they became unsecured creditors in bankruptcy, said Weiner. If the privately owned bank closes, you are screwed. I think that somebody was looking at that. We better have this under our complete control, said constitutional lawyer and gold expert Edwin Vieira of the Texas bill. They don't want to have the gold in some bank somewhere, and in 2 to 5 years it turns out not to be there. Is this the first step down a road to secession? Notably, they'll need that gold to establish their own country once they win the potentially imminent war with the U.S. military, which starts on Monday, Jade Helm. This implicit subordination of the Fed's gold sends a more ominous signal of rising fears of confiscation and leaves us wondering just how long before every state and/or country decides to follow Texas's lead. Thank you for tuning in for this week's Santu Pirls Stock Market Commentary, featuring the proprietary Bull-Bear Point and Figure Market Breadth Summary Chart, compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, that you are looking forward to a great week coming up, and wishing you true success.